we're just a pathway to homeownership, right? We're helping them stop renting, start owning, and putting their foot in the door. But our number one goal is to get them refinanced in 1 to 3 years,
Yes.
right?
Yeah.
So there has to be some incentive on their side to want to refinance.
Get your money
Where
out.
if you just loan to them at 7.5%, they're not going to get much lower than that at the bank.
Right.
Yes.
So when it
And
comes down time for them to be thinking about a refinance, or you're wanting them to refinance out, they're not motivated
right.
or not
Yeah.
as
I look at
motivated.
that. Yeah. And I look at that and the people that are offering 7%, I think, why are you trying to compete?
Hey, everyone. Welcome back to another Real Estate Note Show. I'm your host, Dave Putz, alongside my co-host, Mr. Nathan Turner. How are you, my
How
man?
you doing? Doing really well. How about you, man?
Good. It's been that fall time. We're switching gears, right? The weather's changing, everything else is happening. Um,
Yeah.
things are just changing in the atmosphere. The kids back to school, like we said last show.
Yeah.
But we wanted to push forward in excitement. You were able to go to a conference last weekend, which was out in Arizona. How was that
Yeah.
conference?
Really good, really good. There's nothing like getting together with other people.
Yeah.
Face to face is really where it's at. So it was really good. I'll tell you a little bit more about it later, but I had a really interesting conversation with Beth from JB Lloyd
Yeah.
Insurance. She was telling me about some products that they offer, and I thought, oh, I had no idea. Some really useful kind of insurance products. Conversations with lots of different people. I got a good introduction to an investment group in Canada. It's just, and those are lunchtime type conversations. It's not the kind of thing that you're gonna have with a scheduled meeting
Yeah.
unnecessarily. That's the point of going to conferences, and
Yeah.
you get to have these just kind of offhand conferences or conversations, and all kinds of things come out of it. So I'm a big fan, big fan, big fan.
Yeah.
Highly recommend going to conferences.
Absolutely. So, I think one of the biggest takeaways is always the conversation that you don't always have on the phone. You're kind of stuck in a room together and you just start talking and then magic happens.
Yeah.
Weird how conferences do that. Um, just changes things, right? Um, interesting. So I also want to make sure that because we're talking about seller finance and creative finance today, which we'll get into in a minute, we are sponsored by Dan Deppen over at Call the Underwriter. So if you go to calltheunderwriter.com/JKP, you should get a toolkit to use and everything else. So thank you again, Dan, for sponsoring the show and reaching out to us. So it's amazing what's going on in the world, right? Notes are changing. I just spoke to a guy today, and we'll dive deeper in it when we get into it, our topic. But seller
Mhm.
finance notes are becoming more and more of the thing. With banks changing, we just learned also that 9QMs are becoming a fund level thing where I was talking to Dan about this the other day. Non-QM loans are becoming available in the fund level where people who are not able to get a typical mortgage are going to be able to turn to funds and they're going to be able to create notes in their
Yeah.
world, which changes a
Yeah.
lot.
Yeah.
It'd be interesting to hear.
Yeah, that's huge. And I think, like you say, that's becoming more and more common. I think as time goes on, things are changing. People either don't trust the banks or they don't want to deal with banks for all kinds of different reasons, or they can't. The banking standards are so tight. Not to say that seller finance notes are, looser or risky or anything like that. There are still some standards that everybody needs to abide by,
Yeah,
but it makes it possible and it makes it accessible for a lot of people that otherwise wouldn't be able to own a home.
absolutely. Absolutely. So what's happening in your world? Real quick update. How is Chicago treating you? For those who don't know, Nathan's stuck in an eviction for 2 years, 3 years, 10 years now in Chicago. Any update on
Eight
that world?
years and running. Yeah, I head back out here in a couple of weeks. We're starting a criminal case, which is exciting. That's that's going to run alongside the civil case. So I think we're going to get this wrapped up here soon. I'll keep you posted because this has been just a fascinating journey, and
Yeah,
I want to detail it out and have it as a detailed case
of
study at some
course.
point. But
Yeah.
it's got to be done first,
Hopefully by DME, right? That's what our hope is, right?
right?
So that's
Yeah, I'll
awesome
be
to
happy to
hear.
report by then.
Yeah. So, and we're not gonna. We have some things that are brewing individually that we're both excited about. We're not gonna bring it up publicly yet. Um, I'm excited. I know you're excited. Some
Yeah.
things are gonna be coming out to help all you guys out there. And I also have a side project that I'm working on for you guys as well. in this world of seller finance, again, one of our main missions, I just got the phone with someone an hour ago, and he's probably listening currently. We're trying to connect with those who are seller finance, owner finance, learn your verbiage. And as no creators, we're trying to marry it. As a no
Yes.
creators, it was weird. Dan made some really good comments yesterday on the phone. He says that no buyers are very particular in what we buy. We're so legal. We're so picky on things. And what we find out is that no creators are willy-nilly it. They're like the Wild West over there.
Yeah. Yeah, I love the creativity. Don't get me wrong. I love just, thinking outside the box and trying to come up with solutions. There is a structured framework that we have to live in. That's the reality of it. And so, as much as I love the creativity, and yes, there's certainly a lot of latitude, and we're not banks, which gives us all kinds of flexibility. But that being said, there is a structured framework that we have to abide by collectively, uh, just to help this whole industry continue to grow and thrive. So that
So
we're trying to
just
get that word out. Trying to
Yeah.
get
So
that word.
one of the things I learned the other day by a note creator, they thought that if they did a wrap note with owner occupied, they can do an interest only loan. You can't do that with owner occupants.
No.
You can't do it. I know it works out numbers wise. You can't do it,
Yeah.
right? The owner occupants cannot have interest only loans, and the balloons have to be out more than 60 months. Just little things I don't think note creators realize in either not being taught or just not listening to. Um, Very interesting per se. But
Yeah.
when the world of creative financing and seller finance and the verbiage you guys use out there is so confusing, connecting with people who've done it over and over again successfully, have connected with their legal teams, connected with their note buyers to understand the
Mhm.
world we're living in. The blueprint there is the playbook is key. Would you agree?
Absolutely. Yeah. There, again, you can get into it and you've heard, the person teaching you about the business, and then you start thinking creatively, and you're like, oh, and then we could do this, and oh, we could do that. Maybe, not necessarily. So talk to somebody who has the experience, talk to the right people that are in the industry so that you can understand what that framework is and how you can do this whole business, and you can do all kinds of really cool creative things within a framework.
Yeah, absolutely. Good point. So one of the things I've learned, I met our special guest probably a year and a half ago, and he was amazing. I didn't have to teach him anything. He just had so much knowledge and experience and honesty in his mission. So let's jump in here. Vaughn, I want to welcome you to the show, man. I appreciate you coming on. You are an amazing person doing amazing work. And this is the essence of notes. Making money is secondary. What is your
Yeah.
core goal, Vaughn?
Well, David, man, thanks so much for having me on the show. It's an honor, and I feel very blessed. To your point, obviously, people get into investing and they get into real estate to make money. Obviously, that's like, the ultimate end game. But how we approach that and how we approach making money, and the biggest thing for me is having an impact, right? The more people we help and the more value we provide, the more it's going to come back to us in return. So when I got into real estate investing about 7 years ago, I came from, the fitness industry. I've owned businesses for 15 years before that. So I had a lot of experience running a business. But when I got into real estate, I realized the opportunity to be able to change lives. And people think, oh, didn't you change a lot of lives in the fitness industry? Yeah, I did to a degree, but changing lives, helping people become homeowners, and starting for a lot of people, the creation of generational wealth, which comes with homeownership for most people. Just that opportunity spoke a lot to me and excited me a lot. So going into it, like a lot of newbie investors that really don't know what they're doing. We don't have a lot of cash and we got to make a lot of cash quick. I started wholesaling and just got really, really good at finding off-market properties on the marketing standpoint because I have a sales and marketing background and being able to get in touch with sellers of distressed properties or, people in distressed situations. And then, build rapport with them, create a relationship, and come up with a win-win solution was how I
Mhm.
started.
Hmm.
So the first few years, it was just turning paper, right? Getting properties under contract, selling the paper, and making the spread. And I'm not a flipper. I don't like flipping. I don't like dealing with contractors and all that stuff, and doing all the management of that piece. So I haven't done a lot of flips. But whether it's wholesaling, doing assignments, or flips, a lot of times we see is that's it's transactional, right? Once you turn one, you got to go find the next one.
Good point.
Yeah.
So when in my fitness business, I was big on recurring revenue, right?
Mhm.
Creating monthly cash flow. And so once I started realizing the owner finance piece, which is, in our organization, we have two different terms, right?
Okay.
And they're interchangeable for most people, but for us in our organization to make it clear between the people on our team, we call seller financing when the seller of the property is financing to us, and owner financing is when we're owner financing to the end buyer,
Okay.
which is mainly owner occupants, right?
Good to know. All right.
So we just got real big into that, and then our mission, our core beliefs, and everything came off of that whole, I guess, purpose, cause, and passion.
Okay.
That's
Interesting.
awesome. So we have a similar background. I had a couple of Curves franchises back in the day, so I came from the
Okay.
fitness industry as
Yeah.
well. What do you
Yeah.
know? There you
Curves.
go.
Does Curve still exist?
I don't know if they still exist. So I got out of that in 2009, but yeah, how
I
about
haven't
that? That's cool.
heard about Curves in a while.
It was good. It was good.
Yeah.
It's
Oh yeah.
to your point. It was learning how to help people and learning a lot of the basics on running a business and things like that, and seeing the results of being able to have somebody in many times change their lives for the better.
100%.
It's a great transition into real estate where you can really be helping people in a different way and changing lives in a different way. Very cool.
Absolutely. Thank you.
Yeah. So, Vaughn, in this world of owner finance, you got into it typically how everyone else does, right?
Mhm.
What were some of your biggest mistakes in the beginning when you got started?
Not knowing what I don't know,
Yeah.
right?
Yeah.
So I
Yeah.
kind of fell into our first deal, right? I had a guy seller finances properties to us. It was two rental properties side by side, and then we kind of took that over 0% interest, which is great. And then we had people, we were marketing all of our wholesale deals and things on Facebook,
Yep.
right? And for a long time, even when I was doing my wholesale deals and things like that, I always had people reaching out or commenting on our posts saying, "Hey, will you finance? I got $5,000 down, $10,000 down, $20,000 down, da 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 da." And at that point, I was like, I didn't know anything about it. I didn't know how to make the deal work. So I was just trying to make my quick 20
Yeah.
Sure.
and go to the next one. So I kind of realized that on these, I had good seller financing in place and I wanted to start creating that cash flow. So I started looking into it more. And, we kind of pursued the deal and on one of the properties and it was history after that, right?
Yeah.
Hmm.
Once I
Yeah.
realized I was able to get, right now we get on average $30,000 down on our own finance deals. I think
Hmm.
on that one we got 15 down
Okay.
and then we cash flow on average $682 a month between what we're paying our lender and then what our borrower is paying us. And the best thing about it that I love about it, right, as opposed to rentals, that cash flow is almost 100% profit,
Sure.
Hmm.
right?
Sure.
Depending on what
Absolutely.
you're doing.
Yeah,
So, and
exactly.
then go ahead.
I agree.
Yeah.
Yes, go
Yeah.
ahead.
Please keep going because what people don't know is the numbers behind the scenes and understanding why the shift. Why would
Yeah.
you
Yeah.
shift from where you were to where you are now? If you went back to the beginning, why would you shift? What's the purpose of your shift?
Well, the biggest purpose, right, is the impact that we're having, right? The purpose, cause, and passion. That's the feel goods, right? That, hey, it don't matter how much money you make, but if you feel like you're having an impact, you're helping people and providing value,
Hmm.
right? But to do the complete 100% shift, moving away from most all other exit strategies and doing this, for us is very strategic because I'm a big believer and I I coach some students and things like that. And one of the biggest things I preach is the acronym FOCUS, right?
Mm,
And if you ever heard that acronym, follow one course until successful, all
Okay.
right? Getting really, really good at one thing. And if you get really, really good at that one thing, other opportunities will present itself, right?
Yeah.
So,
Yeah.
but when you're not focused on and completely dialed in on that one thing or getting really good at that one thing, you're spreading your energy and efficiencies elsewhere, right? Which is going to slow down that path.
yes. Yes.
So we decided a few years ago to go all in on our what we call our pathway to home ownership program.
Yeah.
Yeah. Love that.
So you got started here. A lot of people want to know the basics of this seller finance. How would you define in between seller finance and creative finance in your world, in your
Yeah.
space?
Yeah. So the seller financing piece, like I mentioned before, just the internal terminology. When we're talking to a seller, and they're considering selling their property to us on creative terms, right?
Okay.
So how we buy that property, there's so many different ways to skin a cat, right? So you can get creative from subject to straight up seller finance to hybrids to all kinds of things, right?
Hmm.
So the creative piece comes for the most part on the buy side from us, and creating that win-win scenario with the seller. Now on the sell part of it, there's some ways to get creative, but for the most part, I mean, there's certain set of rules and a process that we follow, and big part of it is we have to follow that process, right?
Yep.
To make sure that we're being compliant and we're making sure that the value of our note is as high as it can be.
Yes.
Yep.
Good point. Good point.
So that's a huge thing for us.
Yes. So
Interesting. And then are you turning around and selling the loans that you created, or are you just hanging on to them?
I hang on to them most of the times, depending on where I'm at in my investing. There's times like right now I'm in the recapitalization stage, right?
Hmm.
So I'll sell off some notes, and one of the biggest things I've learned, just in the last 18 months, and David, you asked me earlier about some mistakes that I made at the beginning. I created a lot of bond for titles or contract for deeds at the beginning,
Hmm.
right? And because that's what I was told to do. Right.
mm,
And, so there's attorneys here in the upstate of South Carolina that won't do a wrap, or, they only do bond for title or contracts for deeds. But one thing I didn't realize at that point is the liability that comes with that.
what is a bond for
Right.
deed,
Right.
contract for deed for those who may not know?
Yeah. So we look at a contract for deed or bond for title is kind of like your car, right? If you got a loan on your car, you don't actually hold the title to your car until it's paid off,
Yeah.
right? The bank holds the title. So the same thing with the contract for deed for bond for title. We're selling it on owner financing, but we're selling it with a contract for deed or bond for title where they don't get the deed until they've completely paid off the property.
Right.
Mm.
Yeah. But the
And
biggest
why
thing with
is
that,
yeah, good. Why is that bad? What's the problem with that?
yeah. So, I mean, it depends on what situation you're in, but one of the things I've learned is that, yeah, and I didn't think about it when I was first doing it, is the liability that comes with that because you're on the title, you're on the deed, right?
Yes.
So let's say a tree falls on the house and God forbid kills somebody, right? And somebody decides they want to go, start a lawsuit or sue somebody, who's liable?
Yeah.
Homeowner.
Homeowner.
Yeah. The
Yep.
one on title. Yeah. And,
Yep.
and it's interesting because it's being the one on title is what gives that contract for deed some of the pros, and that's also the cons all at the same time.
Exactly.
One of the things I like is if there's a case of default, it's a much faster, easier process to have that owner or that occupant removed, and then you can sell it off to a different person. But like you say, you also carry the liability that goes along with owning the property. So it's catch 22. It's you got to really weigh it out.
And it really depends on what state you're in
Yes.
and their laws, right? Because in South Carolina, contract for deed, bond for title, or mortgage, you still got to go through the foreclosure process if they're not
Right.
willing to sign the deed back over.
Right. Right. Yeah. And then in
So,
other states, it's a much faster, easier process. And in some states, they don't recognize it at all. And so then
Yeah.
you're
yep.
really in trouble. So you really got to be aware of where you're doing that and what's okay for that particular
Yep.
state. Good
So
point.
how are you today finding properties to do this? What are you looking for? Where do you search? How do you find your inventory to buy?
So for us, it hadn't really changed much from when I first started wholesaling, right? So it's still in the trenches. I have a guy that does driving for dollars for us, and he adds about 2,000 properties per month, right? And so once we're adding those properties, we got a physical picture, recent photo of the property. We're sending out postcards, and on that postcard is the real-time photo or the recent picture on that postcards. And the thing that the big title that they see on that postcard on the top is this your property? I'm interested in buying it.
Mm,
And as a marketer, right, coming from
yes.
that sales and marketing background, I want to elicit a response from that seller. So
Hmm.
if it's physically distressed, which our guy only adds physically distressed properties, and let's say that person lives, an hour away, or they haven't seen the property in a few years, and they get that postcard and it says, "Is this your property?" I want them to look at that postcard, and be like, "Well, that's not my property. Wait, hold on. It is my property, right?
Uh-huh.
It's changed a lot. It's deteriorated." So then they got to make a decision. right? And that decision is, hey, do they go in there and talk to the tenants and make sure that the tenants are taking better care of it? They got to clean it up. Maybe they have some code violations and things such as that. Or like a lot of people, they're tired of being a landlord, tired of dealing with tenants, toilets, and taxes, and they want to get out of that situation. Right.
Absolutely. That's
So now I
awesome.
can buy that property from them in a couple of different ways, right? So I can pay cash for it, or they can become my lender.
Right.
And
Ooh.
now they still get that cash flow that they hoped that they were going to get as being a landlord,
Yeah.
but now they don't have to deal with the headaches.
Mm. That's a great idea, right? Hitting up, because a lot of people are going after those people who want to get the house sold and they do a sub two and they deal with the borrower and stuff like that. Can you get the landlord? They still want to get that cash flow coming in no matter what happens.
Yep.
Yeah.
You're solving a win-win there.
Yeah, and that's the biggest thing is like, as not knowing a lot about real estate, which people that get into real estate at first time, they don't know a lot about real estate, right?
Yeah.
But society tells us that the best way to create passive income is buy rental properties.
Yeah.
Well, there's nothing passive about rental properties, right?
Exactly. Nothing
Even if you
passive.
have the best property manager in the world, you got to manage that property manager.
Yeah.
And then if you have debt on the property, right? Like most people do,
Yep.
let's say a big storm like Hurricane Helene, which came through our area last year, and you got to go replace a roof or an HVAC or whatever that may be. Your cash flow, right, is now gone for a year, 2 years, maybe even more.
Hmm.
Makes sense.
So that passive cash flow that they were relying on is gone or it doesn't exist anymore.
So we had
Hmm.
a quick question coming from Facebook from Jason. What's your current rates you're getting from your borrowers that are owner occupants? And does it
So our
vary by
borrowers,
down payment or not?
it doesn't. It doesn't. Really for us, we're between the 10 and 12% range. And we do have some what we call our hotspot, our sell box, I guess you could say, in our area. Our sweet spot is if we have a property that we can sell for 250 or less.
Hmm.
Right. We're averaging about 15% down. So we're going to average about $30,000 down.
Yeah.
And then, that's really it. Most of our buyers, and we have a waiting list, the biggest thing they're looking at is what the monthly payment is. And they're more willing to put more down just to get the monthly payment to a certain point. Right. But from an interest rate standpoint, the only time we really start seeing any type of pushback is the closer we get to that 12% mark.
Got it.
Hmm.
Right. So for us, it's really the interest rate is really depending on the spread. And I like to have typically at least a 2% spread between what I'm borrowing at and what I'm lending at.
Okay.
Yeah.
Right. So
Yeah.
if my average across my private lenders is 8%, I'm trying to sell at 10%. Right.
Okay.
Hmm.
But if the average goes up to 10%, then I'm looking at 12%.
Yeah, you bring up a great point there with the interest rate because I remember doing that when I was creating loans back in the day. Same kind of thing. We were charging 10% was our typical interest rate. And so I'd get questions from others. They would say, "Oh, how are you getting these guys at 10%?" And you say, "Look, that's not the concern. The concern of most people is what's my monthly payment? And can I afford this monthly payment?" And that
Yeah,
interest rate is really like down the list on important details. They're
absolutely.
really concerned about how much can I afford this month, next year, the next
And are
25
you
years.
are you basing your pricing based on the rentals in the local market?
Yeah, we want the monthly payment, principal and interest to be around what they would be paying in rent, right?
Yeah.
Okay.
Now they'll have to pay taxes and insurance. We have to make sure we escrow those, but we give them an idea of what it should be. So when we market it, we're marketing just the monthly payment, Nathan, like you mentioned, because
Right.
think about how people go shop for cars.
Exactly.
Well said.
What monthly payment can you afford,
Yeah.
Yeah.
right? So
What
the
would
same thing
happen?
happens on houses.
But what would
Yeah.
happen if your market gets to a point where it just doesn't work? Your rental market may be lower, and
Hmm.
it makes it difficult. What would you do if you're in your local market if rentals are killing you and you have to lower or your math says I have to lower my interest rate to get the payment down to match the rentals. How would you handle that problem?
So the biggest thing is if I have debt on it is a spread, right? There
Hmm.
has to be a difference between what I have in the property with my lenders and what I'm selling it for,
Hmm.
right? So it's the same thing from the buy. We make our money on the buy,
Yep.
So it's all about the negotiating, I never have more than 75% of, private money on a property based on the value of the property.
Yep.
Right. So I like on average right now, I think we're about 63%, across our portfolio. But, the biggest thing is if the rental market, obviously, if the numbers start coming down on rents, a lot of times we see prices coming down, right?
Hmm.
And the prices on what we're buying the property for, right? Fortunately enough, in the upstate of South Carolina, in the Greenville market, I mean, it's a hot market, and it just keeps going up and up and up, which is great.
Yep.
But affordability is key, right? So, we got to be at that, 250, a lot of times less, 200 of the sale point. And so if I'm selling a property at 200, 210, I got to be all in it at 150.
Hmm.
Got it.
So that's another thing that I'm looking at is when I'm creating a note for my borrower, for me, where we make our money is in that spread. So one of the first things I look at is I want at least a $50,000 instant spread, right? Instant appreciation.
Yeah.
So if I have 150,000 into the property, I need to be able to sell it for 200 or more.
Now, I
Right.
hope one of the takeaways that people are getting from this is look at the numbers.
Uh,
Don't fall in love with the house. Fall in love with the situation. Look at the numbers. Do the numbers work? Yes or no? Period. And then
yeah.
go from there. And then back into it like you're doing. If I'm going to buy it for this, I have to be able to sell it for that. Is that a realistic number? Yes or no? And like that's it. Don't try to fall in love with the situation and get so creative that you're trying to shoehorn it in and forcing it to work when really it doesn't work.
Exactly.
So I
Exactly.
think
And
one
that's,
of the yeah, no good.
no, I was gonna say I got like three big criteria I look at when creating a note, right? Or even analyzing a property if I should buy it. Can I create at least $50,000 of instant appreciation, right?
Hmm.
I think I just gave myself a thumbs up. Can I create at least $50,000 of instant appreciation? The other thing is, am I going to get at least a 2% interest rate spread?
Yeah.
Right. And then the last one is it going to cash flow $500 or more a month between what I'm paying my lenders and what they're paying me in principal and interest? All right.
Hmm.
And is that hard line black and white? No. I mean, there's certain things, tweaks that we can do to make a deal work. And, I might not have that $50,000 spread, but if I have a 0% interest rate and I'm selling at 10 or 12%,
Sure.
Yeah.
right?
Yeah.
Um, so there's a lot of different factors that come in, but those are the first three things I look at. And if I could see that, then I'm like, okay, this could be a really, really good deal.
For those who are saying, and me and Nathan talk this on the show constantly, is my notes written at 7.5%. What do you
Mhm.
tell the investors who are creating notes at 7? I heard 3.68 the other day. But what do you say to investors like yourself that are creating them and going, yeah, I wrote them at 7.5?
Yeah. So for me, when I hear that, right, I'm like, the value of your note just went down significantly, right?
Mhm.
If you ever needed to exit that note, and a lot of people, I think they write those notes thinking that they're going to stay in that note for forever, right? Well, for us, we're just a pathway to homeownership, right? We're helping them stop renting, start owning, and putting their foot in the door. But our number one goal is to get them refinanced in 1 to 3 years,
Yes.
right?
Yeah.
So there has to be some incentive on their side to want to refinance.
Get your money
Where
out.
if you just loan to them at 7.5%, they're not going to get much lower than that at the bank.
Right.
Yes.
And
So when it
and
comes down time for them to be thinking about a refinance, or you're wanting them to refinance out, they're not motivated
right.
or not
Yeah, I
as
look at
motivated.
that. Yeah, and I look at that and the people that are offering 7%, I think, Why are you trying to compete with the bank? If they
Yeah.
could go to the bank, they would. They can't. That's
What
why they're
happens if
coming
the
to you.
market gets too tough? And
Mhm.
is there a point where you say, listen, I'm going to rate a 10%, but the house stays on the market for 180 days because the interest rate's too high? How would you
Mhm.
handle that?
So for us, is we're very proactive. And I was having this conversation the other day, and people ask, how do I find buyers? Well, that's our primary thing is just like, and it all comes back to the wholesaling piece of it, right? You got to find properties, but you got to have buyers for those properties. So for us, we do a lot of marketing for finding buyers first and foremost. So we have a waiting list. We know what buyers want. We will know what they're looking at. So when we're creating, those notes, 10%, we know that fits in our buyers, you know, their affordability range, right? Or what they're going to pay. So that's a big thing for us. So we don't really run into that a lot.
Yeah.
Because we price it the way it should be priced.
Right.
Now, the biggest thing for us is like if we have a property, and we've had a couple over the last year that are more like, hey, we need to sell it at 299, right? Well, the biggest thing on that is we always ask for 20% down. So they had to come out more of pocket. Now we'll adjust that. Our internally, our floor is 12%.
Hmm.
Um, absolute rock bottom is 10% down
Hmm.
payment.
Hmm.
Because I think anybody that has less than 10% into a property that's getting owner finance doesn't have enough skin in the game.
Absolutely.
And I think that significantly devalues the note, right? But even if we drop that down to 12%, well, we still got to look at the monthly payment, and does that monthly payment fit within where they want to be? And if the principal and interest is over $2,000 for most people, that might price them out of the deal.
Yeah.
Yeah. So
So we've seen some of those that sit longer.
how do you market to find your borrowers?
Going back to Facebook, right where it all started. So for us, it's Facebook, and when people ask me that, they're like, Facebook Marketplace. Not necessarily, right? We post on Facebook Marketplace, but that's not where we get the most of our leads from. It's Facebook groups, right?
Mm.
So the majority of our buyers are Latino,
Hmm.
right? And if there's three things I know about the Latino population is they always have cash, right? They always pay their bills, so they're in there paying their bills on time, if not early,
Hmm.
right? They're big on community, so they spread the word, right?
Hmm.
And they typically want to try to pay things off faster,
Yeah.
right?
Right.
But the biggest thing is they deal with people that they know, like, and trust.
Mm.
They love dealing with people. That's why a lot of wherever you go, the Hispanic communities, you can tell where the Hispanic communities are, right? Because they all want to be near each other. We got
Yeah.
the
Hmm.
west side of town, White Horse Road, that's the Hispanic community. Um, so dealing with people that they know, like, and trust, having somebody on your team that is a big influence in the Spanish community is huge.
Got it.
That's good.
So the girl that runs our owner finance program, she's Mexican. She used to clean my house like 4 or 5 years ago. And then one day she asked, I asked her to come clean my office. She found out what we did, and she's like, "Can I talk to you?" And we had a conversation, and she was like, "Yeah, everybody keeps telling me I need to be a real estate agent, a realtor." And I'm like, "No, you don't. You need to come work for me."
Yeah.
So yeah, she's out of the 40 plus families we helped over the last couple of years.
Oh,
She's brought probably 38, 39 of them.
Oh, fantastic.
wow.
Great.
Because they trust her, right?
Yeah.
Yes.
I'm just the face. She walks through the office and meeting, we're doing closing and stuff. She's introducing me as El Jefe, the boss. I'm like, no, no, no.
That's
But
awesome.
that's key. But yeah, going back to Facebook groups, I joined yard sale groups, garage sale groups, buy sell groups. Those are all the people that are, they're looking for, hey, when you market owner financing, monthly payment, down payment, this. Those are the people that are responding. The Latino groups. I try to join every Latino group. I don't do it. I don't market a lot in real estate groups, for like real estate agents or investors, because that's not who we're looking for,
Right.
right? But I do, other than the Facebook communities and the Facebook groups, real estate agents are a good one because they've
Mm.
Hmm.
all had somebody that wants to buy a house and maybe they didn't fit those boxes that the traditional banks require them to have, but they
Right.
have a down payment. They can show proof that they can afford the monthly payment, so they meet the ability to repay standards, and they just need somebody to help give them a foot in the door.
Hmm.
Absolutely. So when you're dealing with these borrowers, what are you posting in these groups? Are you doing images? Are you doing text? What's your trick of the trade, you want to call it?
Yeah, so usually we do a picture of the house, or if we don't have a house at that time, we'll do like what we call a ghost post, right? A house that we had previously, or a house that we're looking at, or whatever, and just a picture of the house, and we'll just put some copies, such as the area of town that the property is located, 3 bedroom, 2 bath, 1,400 square foot, $30,000 down, $1,500 a month,
Mm,
and just let people start reaching out about more information,
that's
right?
awesome.
Now,
Fantastic.
if that
Yeah.
property is already sold, or if it's not a real property that we currently have, then we're open up the conversation and say, hey, unfortunately, that property is no longer available, but tell me a little bit about what you're looking at. and then trying
Hmm.
to get an idea of what they have for the down payment, what they can afford on a monthly payment standpoint, what sides of town they want to live on, how many bedrooms, how many bathrooms, things such as
Mhm.
that.
Okay.
Perfect. Yeah.
So are you manually doing all this posting, or are you doing kind of automation and do this?
No, I got a team like my owner finance specialist. She does a lot of it in her groups. So seeing it come straight from her is huge.
Mhm.
But I also have some VAs that post in these groups for me. So I'm not doing a lot of AI per se right now, but
Yeah,
kind of moving in that direction, right?
Mhm.
absolutely. So the big part about this, me and Nathan have been talking about this for years, the paperwork,
Yeah.
Hmm.
the collateral.
Yeah.
For those who don't know, and maybe came from where you were wholesaling, what are some of the key things that you said, oh my God, I didn't know. Thank God I know now, that woke you up?
Yeah. So compliance
What does
is
that
a
look
huge
like?
one.
What does that mean?
So one of the things that if we're selling properties to owner occupants, there's still certain rules we have to follow, right? And if we don't follow those rules, one, it can put you in a lot of legal trouble, but two, it can significantly devalue your note if you ever needed to exit that note for whatever reason.
Mhm.
And or if that person that the borrower that bought that property from you all of a sudden stops paying or has an issue, and they want to come after you, they hire an attorney or whatever it may be, and say, well, this guy knew that I couldn't afford it anyways, right? If they wanted to play that game, well, now they got a leg to stand on because you didn't do anything to verify that they could afford it,
Right.
Yes.
right? And so the reason that the Dodd-Frank Act is in place is because of back in 2008 and in those times where predatory lending was a big thing and people were literally going after using that as a strategy, getting a down payment, knowing they couldn't afford the monthly payment, taking the property back and doing it again.
Yeah.
Right? So fortunately enough, I learned that early on into my financing career. So I did that from
Mhm.
day one.
Yes.
So, and it's a requirement on every deal that we do. We have to underwrite everybody, right? And then we also service everything through a third party note servicer.
Yeah. Yeah.
Makes sense.
Fantastic.
Makes sense. So
Very
who
good.
is currently doing your RMLO? Do you have someone in house? Are you hiring
So we,
outside?
yeah. So the biggest thing is like earlier, you mentioned that Dan Deppen with Call the Underwriter sponsored the show. So we
Yeah.
used Dan or Call the Underwriter for years.
Mhm.
From our first probably 20, 25 notes. But we
Yeah.
were doing it in such volume that I decided to bring it in house. I hired an RMLO
Yes.
that does underwriting for us now and delivers all the disclosures, does the ATR certification, does all that stuff. And that way we know that we're doing everything legally right. And we're dotting our I's, crossing our T's, we're getting everything buttoned up. But also we know it's going to increase the value of our note as
Yes.
well. And so
Yes.
we also have a servicing company that can service any loans or notes, but only in South Carolina. So,
Okay.
Okay.
so we're
And
only doing
then
the servicing piece in South Carolina.
I'm sure you're doing this, but just checking. Are you having the borrower pay the servicing cost?
Absolutely. We carry everything over
I
to the
knew it.
servicer. Everything's escrowed. They're paying the underwriting fee. They're paying the
Yeah.
closing costs. They're everything. So,
Yeah. So for the people that are doing the owner finance, it doesn't cost you anything. It's nothing but good can come of it, and
yeah,
it doesn't even cost you anything. You can pass on that cost to the borrower,
Yep.
and it's
100%.
that
And
much better of a note.
the only way it would cost them is if they do the initial application for
Sure.
compliance and that person doesn't get approved, right? They get
Yeah.
denied, right?
Okay.
Yeah.
So if the investor decides to front that money, well, 200 bucks, 100,
Yep.
100 something bucks later, they
Yeah.
might be at 150, 200 bucks, but that's probably the best 150, 200 bucks they ever spent
Yes. Yes.
to
Absolutely.
save a world of headache. But what we do is we have a lot of people that makes the borrower pay that initial 150, 200 bucks to do the application. That's their
Hmm.
application fee.
Yeah.
Yes. So for
Yeah.
those people who were in your spot who are doing seller finance and they say, I'm going to do servicing myself, what do you tell those people?
Don't do it. Don't do it. Well, I mean, they could, yeah. If you have a handful, one or two or whatever, and you're really, really good at keeping good records, and everybody's definition of really, really good is each his own, right?
Yes.
But that's if you're keeping records on yourself, I mean, if something legally comes up, then the auditor might come in and say, I don't like how you're doing things, right?
Yeah.
Hmm.
Whereas you keep that at arm's length by using a third party,
Mhm.
that's certified, that's licensed, and let them handle it.
Yes.
Right.
Well said. It's
Yeah.
amazing how many people don't do that, and they try doing it in the house to save some money. Um, and I think what most people don't realize is that when they get into default, you're gonna really wish you had a servicer handling everything because you don't want to be that responsible party to be checking things, looking at things, and realize you did something wrong that really screws up your deal. And
Yeah.
you're hoping the judge will save the day and fix it, right? So
Yep.
with these regarding these, these borrowers, these properties, these paperwork, what are some of the biggest mistakes story you can share that went wrong that they can learn from?
Oh, let's see. Well, here's a story, right? And we did underwrite it, and this is a little different off the realm of what you're asking, but this is our only foreclosure we've ever had to go through, right? And being that we've done over 40 of these, that speaks volumes to
Yeah.
our
Hmm.
underwriting.
Hmm.
But one of our early properties that we did own the financing on, property I bought for 145,000, sold it for 210,000 or 215,000 as is, got $50,000 down. The property appraised at $215,000 as is. So I got it,
Hmm.
bought it good. They went in and completely renovated the entire property. So after the renovation, appraisal came in at 300,000.
Nice.
Um, but the guy, he was a Hispanic guy, Latino guy, owned a Mexican restaurant. And this is a couple years ago. It just so happened he got picked up in a big international drug cartel ring.
Oh, no.
Oh.
And so the reason I knew that happened at the time it did is because my wife told me about it. And I was just looking at the pictures and the names. And I was like, I know that guy, right?
Hmm.
And I didn't know him like I met him or like personally, but the name is always in our when we're looking at our records, right? And so, but there he was in jail for 60 days. During that entire 60 days, his wife came in, paid religiously. They were great payers. They paid at least 2 weeks early. A lot of times they'll pay more or whatever. And then he got out after 60 days. Well, about 30 days later after he got out, we noticed that their due date was come up and they're usually paying early. So that's not right. So we started reaching out to him, couldn't get in touch with him. Finally sent our
Mm.
guy out, our boots on the ground guy to look at the property. And he's like, the property's abandoned,
Oh
right?
no.
So being that it was a contract for deed situation,
Mm.
right?
Yeah.
Um, and the fact that he wasn't there, we didn't have anybody to sign the deed back over to us.
Right.
We actually hired a private investigator to go try to find him or somebody, related to him or whatever. And after about 3 weeks, they came back and they're like, we're pretty sure they fled the country.
Hmm.
So we had to go through the foreclosure process and whatnot. But guess what? Once we got the property back, we sold it again for $50,000 down. And
Yeah.
So
that's not the route you want to do, right? But
correct. But that stressed the point that you can do everything right and things you didn't expect can happen. A perfect
mhm,
borrower can get stuck somehow. And
Hmm.
yep,
you can do the best underwriting possible, but the only underwriting you can't do is the future. You don't know what's
Hmm.
yep,
going to happen to people. And it sucks. Um, it doesn't matter what kind of underwriting you do, you cannot predict what's going to happen in the future. So, for those who are really interested in this kind of stuff, would you tell people to get into this out of wholesaling or rentals or that kind of stuff? Would you suggest this? And why would you suggest something like this? Because it sounds so legal.
yeah. So you take the legal part of it by having a third party company, right? And you just follow the process, trust the process, right? And here's a
Yeah.
checklist of everything you need to do. So you take that part out of it. But yeah, I mean, obviously, I'm very passionate about it. So I encourage people to consider it as an exit strategy. To be successful at it and do it at scale. It is work, right?
Yes.
It's an active investor, right? It's
Hmm.
for me, is you got active landlords, right?
Hmm.
But I don't like the phone calls late at night, the repairs and all that stuff, the
Right.
maintenance requests. With this is just make sure that one, if I set it up correctly, right? If I set the note up correctly, then that becomes extremely passive on the back end because I'm using a third party servicer,
Yeah.
right?
Yeah.
Yep.
But the work to get to that point of finding the properties, putting the deals together, finding the borrowers, all that good stuff is very active. And
Yeah.
it's a lot of it is sales and marketing, right?
Yeah.
That's
Sales, marketing,
awesome.
and relationships.
Yeah.
So for those note buyers out there, really excited about hearing your stuff, right? And looking to buy your stuff, are you willing to sell partials, whole loans, all those kind of
Yeah.
things?
I've sold whole loans. I haven't sold any partials yet. I
Okay.
just haven't educated myself a lot on the partials.
Yeah.
Starting to get into that a little bit more.
Yeah.
But yeah, I've sold notes. I've so there's some situations where we've had some RTOs or lease options, and I've actually sold those, and or some of those. I didn't even realize that people were willing to buy them when I first got into it, right?
I bought those.
But
Yep.
Yeah.
yeah, but the biggest thing for us too is if it's an RTO or lease option, we're still underwriting.
Yep.
Yeah.
You have
Right.
to.
And the ones that we have sold is, let's say it's the Latino population, and they're a cash operating,
Yeah.
culture. They might not have a bank account or they don't put a lot of their money in the bank. So to meet those debt to income ratios, whatever, they need 12 months of
Yep.
bank statements showing a certain amount of money being deposited.
Yep.
Right.
Yep.
Right.
Right. So, that's how we not necessarily get around that, but put them in a position, right? So, hey, 12 months of deposits. Let's say we tell them go put $5,000. You might make 20,000, but go put
Yeah.
$5,000 a month in this bank account for the next 12 months consecutively. So now you meet that requirement,
Yeah.
right?
It makes a lot of
Right.
So,
sense.
Hey, so
So
what's the term on your notes? Like how many years are you doing these for?
so for us, we always do a 30-year mortgage.
Nice.
And
Okay.
because the reason we do that is because 30-year mortgages are heavy front loaded with interest,
Yeah.
and we make our money with interest,
Yeah.
right? And then we have an actual in my office building, there's a mortgage company that we've partnered with,
Oh,
and their
nice.
job is to what we call chase the refi, right?
Yeah.
So we introduce them throughout the process of us financing them. And the guy is a tall, skinny white guy with glasses. You would never know it, but he lived in Uruguay for 12 years or 15 years.
Oh,
So he's
yeah.
fully fluent,
Okay.
and
wow.
he doesn't get paid until he gets the refi. So
Yeah.
Yeah.
he can meet with them and know know what they need to do, whether it's credit, whether it's, hey, I need 12 months of bank statements, I need to do this, I need to do that, and then just follow up with them and walk them through the process.
Awesome. Very good.
I love the fact you said that people who are charging low interest rates, you want to motivate the buyer to refi out. You don't want
100%.
them to be comfortable, right? You don't want them sitting there at a low interest rate for next, which most homeowners today are sitting at a 3% interest rate, and the banks are wishing to get the house back to refi, and they can't. There's no money to
Yeah.
be
Mhm.
made, right? It's
Yep.
amazing in the world you're in. Now I know you do some teaching. Those who are on the call and on the YouTube and the podcast, we'll share the link to get a hold of Vaughn. I would encourage you to. I met Vaughn a long time ago, and everything he says is true, and he's honest, which is two great things to work with someone. Know, like, and trust is a big thing for all of us. So
Mhm.
feel free to reach out to him. Before we let you go, Nathan, I'll let you go with the last question.
Yeah. So you've been doing this a while now, and with your background with wholesaling and everything else, um, given where we're at now, what do you see coming up? Like, what's your crystal ball prediction here for what you're doing? Are
Yeah.
you anticipating doing the same thing, or is there going to be a change of strategy? What do you figure
Absolutely.
what's coming up?
So for us, it's kind of a little bit different market, right?
Yeah.
We've seen a lot of shifts in the South Carolina market, and especially in the upstate over the last couple of years from a wholesaling standpoint, because it's now illegal, right,
Yeah.
in South Carolina.
Mm-hmm.
So that did take I guess a revenue stream, but we're already starting to make that pivot anyways. But there's always going to be people that need owner financing, right? There's always going to be people that don't tick those boxes that the traditional banks have, but they're tired of renting. They want to stop renting and start owning.
Hmm.
They just need somebody that's willing to give them a foot in the door. I do think it's interesting because we were having a conversation, I think, before we jumped on the call, but that there's funds out there now that are possibly looking at non-QM loans and funding
Hmm.
non-QM loans and things like that. So I think you'll see people like that start to come into the industry a little bit more. But yeah, there's for us, Dave, you talk about know, like, and trust. It's all about relationships,
Hmm.
right? And if you build a relationships and a reputation in the communities that you're working in, then people do business with people that they know, like, and trust.
Yeah.
So for funny story, last week I just got honored at a 10-year gala for the Hispanic community, put on by Inside
Wow.
Magazine, which is the largest Latino publication in South Carolina. And
Cool.
I was recognized as one of 25 pioneers in the Latino community over the last 10 years.
Fantastic.
Congratulations. That's
Don't speak
amazing.
a lick of Spanish other than hola, ¿cómo estás? I'm in there having to listen to everything through an interpreter.
Yeah.
But
Good
you're
for you.
solving a
That's
problem.
awesome.
You're solving a problem
But
that they have.
Yeah.
that just kind of shows you the impact that we've been able to have on the community, that they recognize us, or even volunteer, or honored us to be one of the pioneers. So
Oh,
Yeah,
that's
that's great.
amazing. Well, Vaughn, it was a pleasure having you on. Hold on for after hours, guys. If you want to get a hold of them, the link's inside the chat. It was awesome, man. It's your fresh breath of air. The fact you have all your stuff together is rare in this community. There's a lot of people doing this incorrectly, half done the correct way, and it shouldn't be done that way. You have to be professional. Everything you said has been spot on. I encourage more people to do it the way Vaughn's doing it. So again, I thank you for coming on this Friday afternoon. Again, Vaughn, appreciate your time.
thanks for having me. I appreciate it.
Thank you, man.